I think we got to start with the big stock story of the morning, Meta. What do you think about the results, Mark Zuckerberg's comments that actually brought the stock lower, and just that whole Mag 7 trade?
So I think we're kind of saying reconciliation, reckoning, rotation, whatever you want to call it. But the numbers were fantastic, right? The problem is the story, which is Mark getting real and saying we're going to need to spend. And what I've been wondering about is, the last quarter, everyone was talking about how many times AI was mentioned. I felt like I'm being, exaggerating here, but the more time a company was able to mention AI in their quarterly conference call, the more the stock went up. I'm wondering if this quarter, what we're going to see more of between Meta today and then what reports next are investors already asking, okay, AI is coming. Show me the money. Where's that actually coming from? And in the case of Facebook, Meta, even though the numbers of the past quarter were incredible, they're saying, look, in the future, it's going to take a lot of spend. So that's not the money investors want to see when they're paying those premium valuations. We own this. We've trimmed it along the way, and I'm really glad we did.
All right, you were just alluding to your WEX word of the day. It's rotate. So you're doing some rotation of your own in your portfolios.
Oh, no, sorry. We're not rotating our portfolios. What we're seeing is rotation in our portfolios. So, for example, in our disciplined growth portfolio, right, we have Meta down 12% pre-market. We also have Teradyne and United Rentals. So you have a company like Teradyne that's down 7% year to date, trading at about 20 times next year's earnings. Guess what? As of last night, that was looking like they reported perfectly great earnings. And guess what? That looks like it's going to be up 8% today. United Rentals, great company, but out of the spotlight, not the way Meta is. That's looking up another, I think, 6 or 7% today, at least as of last night. That's what the pre-market was looking like. So I'm seeing rotation within the portfolios. Then equally interesting in our equity income strategy, the dividend strategy, where we see IBM looking down 8% because, and by the way, I'm really annoyed with everybody picking on IBM because they're like, oh, revenues. Like, okay, let's focus on the fact that they actually beat on earnings and those were great. And they came in because of better margins. They actually reported $1.68 of earnings where the street was expecting $1.59. But again, they used AI a lot, so there was a lot of enthusiasm in that, maybe too much. So you see IBM down.
We're going to pivot just away from AI just for a moment, Jenny. Let's go to one of the reports coming up later today. Q1 GDP estimate 2.2%. The Q4 read was 3.4%. What do you think this possible deceleration, if it actually meets the estimates, what is that going to mean to the markets, this report? A hotter read, does that lead to a sell-off? Or has Jay Powell already basically set up the narrative that rates are going to probably stay higher for longer?
I think rates higher for longer. So anything, I think a higher read would actually be negative for the market. I think we need some cooling. We need to see some, cooling and growth, something that the higher rates for so long are starting to impact and cool inflation on. But Frank, I have to finish my last sentence before, which is in our portfolio. You also see Whirlpool and Western Union up today where IBM's down. That's the rotation. Sorry, we can get back to GDP. But I'm looking for a negative number. I want a negative number because I want those rate cuts this year.